Hey, good afternoon. It's Bob Trade Genius. The 2nd of August. I want to just show you the futures and specifically Nasdaq. And I just want to just show you the difference in how the tape is acting right now. And if you go with me back to here, when this move started prior to the earnings, look how tight the candles are and look how tight the ranges are and look at the grind higher. And then when you got to last Thursday, that's when Facebook reported, and as you remember, I said, hey, I think Facebook's going to top the market. It's the new growth company. Used to be Microsoft, and it used to be Google, and it used to be Amazon, and now it's Facebook. And I'll get to Apple in a second. And so they posted, had good earnings, but they couldn't keep the gains because what's happening is the Nasdaq's up multiples of the earnings growth of the entire index, and these leading companies, they just cannot maintain the rest of the index. Number one, and number two, they can't grow like this. I mean, these companies are 2, 3, 4% of the GDP of the United States, and into an environment that in an economy that's slowly going to stagnation, if not an out-and-out recession. And so you should expect some pullback, and that's exactly what we got. And that, I mean, it was just boom, huge move down, and it's been fighting its way ever since. But look at the difference in the candles. I mean, these are just wicked moves. This is selling off, and then they turn these algos on, to try to bid them back up every day. You get a sell off, and then they bid it back up. You get a sell off, and they bid it back up. Rinse and repeat. And so, and today, we had last night we had Apple reporting. Sorry about that. We had Apple reporting, and they jammed it overnight pretty hard, and making it look like, hey, this thing's going to really rock and roll, and they can only get it back to the 61.8 retracement level, and it sold off. And then the second time they went at it, it only got to the 50% retracement level. Okay, and now what we have to watch out for is 58.40. It's the price level for failure, and at this point it has to get over 64 for me to think they're going to take this to new highs in this go around. But I think we topped for the earnings season, and now we have 3 to 6 weeks to go down. And then speaking of what you've seen all these arrows on here, this is the day trading machine. I trade this thing on the 15-minute. We simplified it. So the next iteration is coming out. I told everybody that we're just going to keep engineering out opportunities for people to either make mistakes or to have to interpret the data. And this is the latest iteration of it, and it works really well. So if you started trading here, like I said, you have to ignore this noise in the middle of the night, but you would have caught a nice up move, and when the market opened, you'd have caught a nice move down, down, down. Is that I went from 4 short to 2 short here. I went from 2 short to no short here. I went long 2 here, and then I'm down short 1 now for the overnight. And so this is a couple $1,000s worth of trading, and very, 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 very smooth. And the signals are responsive enough that you're able to get in on these trades quick enough to make a difference. And like I said, these arrow colors mean things. So once you get it, I'll be doing a class again on how to use this, tell you how to set it up, how to use it, and like I said, for what you pay for it, you're gonna make your money back pretty quickly on it. So anyway, it's at the TradeGeniusAcademy.com. It's under the tips and tricks area, and our intention is as we improve it, we just will keep improving it for those who have purchased it, and take advantage of it. And then we'll be moving on. I have one now for a couple of the equities, a little bit of a tweak because it's a little different than the continuous trading of the futures. I think people are going to like that one too. Again, I'm going to put it through the testing, and then we'll get that out as well. So anyway, this is the money machine. And then oil is starting to struggle now too. Both earnings report, both draw reports got selling. Political environment's pushing it back up. But I think it's just a matter of time before it rolls over. We're going into the slow season on oil as well, and the U.S. drillers have just bought or I should say sold a boatload of contracts into the next year at 50. So these guys are going to produce balls out, and it's just going to we're just going to flood the market with oil, and they're all well protected now for their futures contracts. So now they just got to produce into it. So anyway, I think it's going to be pretty interesting. So the way I'm playing is I'm short oil, I'm short NASDAQ, I'm short the Qs, and long miners and metals, but we got out of them this week, and we'll be looking to reload on those. I'm going to get to that right now. So we start with Apple here. Like I said yesterday, Apple is the NASDAQ is 100 is the NASDAQ NQ, and it's market cap weighted. So the more the bigger stocks move higher, the more the index goes up. It's kind of like a distortion field. But when it works in reverse, it'll absolutely crush these indexes. That's why I've been warning people and warning people and warning people. These aren't one for ones. If Amazon and Google and Microsoft and Facebook and Apple all had a 2 or 3% down day, the market's going to be down more than 2 or 3%. It's going to flush, and so it's just the weighting they have on the market is bigger than proportion to who they are. It becomes a geometric function versus an arithmetic function, and so I think we're at that point. And you noticed NASDAQ couldn't hold its gains, and then now it's trying to push up. And if this fails and we get 28.48 before we get a new high, then we should expect a pretty good correction in technology. Okay, and look at Apple. So Apple hit 160. It's back down to 157.17. Its highs in June were 156 change. So it's really a double top here. I mean, just peaked over. This is a company that's supposed to be the end all be all, and they could, 7% revenue, 10%, future earnings is not going to cut it. And their cash, don't let the cash thing fool you. They got to pay taxes on that thing when they move it. Okay, that's why they've been holding it, waiting to see what Congress will do, if anything. And number two is that they've been piling on debt too. And that's the other game they play. So they have debt, and and they have cash. And so that's how they keep their taxes down. But their cash position is not 261 billion. Net cash is 100 billion less than that. And then you take 35% off of that for taxes. You're looking at really a cash hoard of $100 billion. Not shabby, but it's not 261 billion. People conveniently don't let you know that information, and so things aren't as sparkly. For a company that's trading at $800 billion market cap, okay, with a PE of 30, growing at 10% a year, okay, this stock should actually be half the price, okay, no reflection on the company, the management, the products, anything. It's that overvalued, and that's what's so scary. And so I guess when the Japanese and the Swiss decide to stop buying it, then it's Katie bar the door. So we got Google. Google had another down day. Microsoft another down day. Facebook another down day. Amazon another down day. Okay, and then SPY, they pin it like they always do with the VIX. So everybody thought that the fangs would be all lifted by Apple, but they're all in different orbits here. Facebook and Google are more alike to each other. And Amazon's really a retailer with some cloud into it. I like to consider Amazon's the world's biggest flea market. That's really what they are. If you really understand what they do, they own the real estate. They take a piece of the transaction, and they handle the logistics for the people in their stalls. And it's a very low margin business, and the business they have high margins in is being eroded by Google and Microsoft, and those guys aren't slouches. So I think these five, if you think about it, are all going to cannibalize each other. Amazon's going to screw Facebook and Google because they're getting rid of what's called the branded goods market. So these companies are not going to advertise on the internet to the extent they're going to do other kind of things like promotionals and in-store stuff, to keep their product moving. So we're going to see some pressure on the advertising side of it. and then Google and Microsoft are pressuring Amazon on the cloud side of it, and and so on and so forth. And Netflix can't make any money from what they're doing. So you got the Amazon, Netflix, Tesla model of growing for growth's sake, but nobody ever sat down and said, what happens when they stop investing? What's their theoretical high margin? And it's nothing. It's negative. And so, but people are in suspended disbelief, because if it's going up, I'll keep buying it. But these companies, they're not going to be able to refinance, or they're not going to be able to get more credit. They're going to have to do some serious pruning of their businesses to be able to get the profit they need to get. But the stock will get cratered in that process just for them to survive. That's why this stuff always ends so badly when it does. It just doesn't level off. Once people say, whoa, you're not growing anymore, why aren't you making any cash? Goodbye, and you're gone. So anyway, but SPY's a different animal. And then we got Nvidia here. I'm not sure when they report, but their chips their chips are in AI, and their chips are in graphics. Their chips are in the car market, and automobiles not doing so hot. So I suspect that they're going to come off, and they're grossly overpriced too. Here's Netflix. They're down today. Tesla. So Tesla reported, okay, so they got a little bit of a pop because they had more revenue than they let on, and but who knows how much of that are deposits for the three. We don't know how much they push forward, but again, they lost $1.13 a share. This company cannot make money on their cars. This is, again, if I would be buying this company for my own self, I'd be fired, because this company literally has no book value. There's nothing there that anybody will want when this thing craters. Okay, they manufacture their cars in California. All right, they have huge competitors that are well capitalized, and they have a market that's not being subsidized anymore. So just bear in mind, for those Tesla bulls out there, this company literally is worth zero. There's no even salvage value. The patents they have, are worth nothing, to the companies that would buy them. So it'd be just really, it's going to be really interesting when this rolls over. Here's the Qs. Qs are flat. They're pinning the Qs now too, but I showed you the market today. That internally is pretty brutal. I think we're going to see more and more of that too as we go along. Here's gold. I think gold's going to start pushing down a little bit now, and that's why we got out of our trade last week. Now we're just kind of sitting, wait for it to reset, waiting for my money flow to reset down here again. Hopefully my my intermediate trend will stay above 60, and that I know that I can buy the dip with confidence. IWM, small caps are dying here. Now, just once the financial go, this is going to really go. Biotech's hurting this a little bit too. Yeah, I don't know why the banks are up. It's a total head scratcher to me. Nobody can explain it to me. All the levers in their business model is going backwards, and yet they've been bid up here, along with everything else in the beginning of June. So, I've just been staying away. I'd love to be able to take some FAS puts, but I need to see this thing start to come off a little bit first. XLE, starting to get our selling on this a little bit now. Like I said, I get the 64 puts for August. I'm still confident that I'm going to make money on these puts. Okay, XLK. Here's Twitter. Look at Twitter, down 20%. That's the Amazon stock. Gold. Okay, so I'm personally in WPM. Our stop hit. We're out of it. It was a profitable trade, and so I'm, like I told you yesterday, I'm completely covered. Looking for an opportunity to get back in. If I was telling folks to get back in, we'd be looking probably around 1950 to 1970 area. I think it'll push down that far, and then I'll start selling puts underneath this naked, because I got called out of 1,000 shares, and I'll see if I can get my basis down on WPM. So, you know, from just a basis without what I'm carving out in cash is I'm around 2021, but then on the but I've been harvesting options on this stuff for about 6 weeks now, so I'd have to sit down and write it all out. But it's the trade's good for me, and like I said, I'm expecting to pull 40% gain off this thing, no problem, next 12 months. MOS, we got out just in time. This thing you just never know when they're going to drop the nuclear bomb on this thing anymore. And I was watching it, but I'd love for it to fail, and I'd love for it to get down to here, and then I'll buy it again. And GDX, SLB, everything's coming back down today. We got a CCJ, we're not getting back in yet. Not touching real estate. Same with GDXJ, profitable trade. Okay, SLCA, I think I'm gonna probably take this off the watch list. Okay, the biotech pushed down, but it looks like that was their funding mechanism for the day to get everything to zero. Nugget, I think we gotta let this thing rewind now. AG, I'm looking for this. I'd love for this thing to get down. I would love for it to get down to here, 750 area, even to here, and then and start buying it again. This thing's been $7 to $8, $7 to $8. We've had 3 or 4 really good trades on this, and once Mr. Money Flow gets all lined up again, we'll jump on it. Oh, sorry, friend, Mr. VXX. You know, there was an intraday trade here, but it's holding up pretty good. So I just think, you know, well, I don't think anything. This thing always screws me up when you try to go long it. I'm just going to let it go long, and then look for my opportunity to short it again. But, you know, I think we may get a 2011 event where it could be a couple months worth of banging your head trying to take this thing short too. So just we'll just bear that in mind. But right now, it held today. Here's FAS. What I'm going to talk about. It's way overbought, and something's levitating it. Just not really quite sure what. But I want it to break, and then I'll go for it. Here's UVXY. There's a little bit of a trade in it for those guys day trading it, and then I'll release the stock volatility money machine signal I have, but I don't want people trading it now. I want to let this thing sell off first, because I hate to give this to people and have this thing go bidless on when this thing unwinds. It's really at a point where I'd be doing you a disservice, because you just don't know when it's going to break, and when it breaks, it literally will go bid less, because it's that out of whack right now. Speaking of the devil, here's the dollar. You know, everybody's waiting for this thing to break back higher, but it just keeps drifting away. Oil, they said I have UCO puts for August. Looks like it's starting to give way, and we'll see what does here. I think people got a little nervous here with Trump doing stuff to Venezuela and doing looks like they're going to do some sanctions with China, and so things are getting a little hairy. I think people are probably rolling into some of these commodities to protect themselves. It's TNA, DWA, yeah, DWA. We have this. Looks fine. It's just gone nowhere for me in a year and a half. But that's not why I own it. This is my parachute when we have some really serious food disruptions. PRX, XME. This is telling me that it's deflationary, not inflationary, and so it's something to keep an eye on. But it doesn't look like it popped. It looked like so they could just sell it off. Here's UNG. I was thinking about taking this thing long. It doesn't quite look ready for prime time yet, but I'm watching it. Okay, we took a position SQQQ today, and so I have the limits and stops up there, but this is one I'm looking to hold hopefully for a month or more. Here's FAS. Here's oil. Mr. Dust. I think I'm just about there. That move kind of caught me on TWAM a little bit here. I'm going to just kind of wait to see if it settles back, and then this will be the other short trade I take, because I think this is where the opportunity is going to be in the tech and the small caps. They pushed the yen down today. Well, actually, yeah, pushed the yen down today. Use it to try to stabilize the market. They were successful. JJG, flattish today. Looks like the energy is setting back up again. Uranium was down. We already have that tech. Here's copper. Copper hasn't done anything since it had that pop on the 25th, 6th. Here's coffee. I got out of it. Looks like it's doing really well, though. I'm looking for a little bit more of a sell-off before I recommend people get back into it again. Okay. Corn is setting back up again. Okay. If this gets down closer to $12, I'll recommend it again. Drip. Some guys were in drip. They held today. They had a nice pop to sell into, but I don't think drip is done yet. And I think there'll be an opportunity to get back in this thing to move higher. Okay, Mr. Sugar's just grinding away too. Sugar and coffee they kind of work together. Okay, wheat had a nice little pop there, 3 cents, but looks like it's money flow setting back up again. It can't get any lower than this. It just will go offline. Soybeans are going to come back for sure. Chinese are big buyers of this right now. And let's see here. That's the short of the semis. So we had a little bit of a higher movement in the 10-year. I expect this. We're going to get this thing back down close to 20. It'd be refi time. And there's the VIX over 1022. VVIX. I think we're done. Anyway, I hope you guys have a great night, and I'll catch you guys tomorrow, and we'll sure it's going to be an interesting night and day tomorrow too. Thanks. Bye.